GameStop to the moon, AMC to the moon, Dogecoin to the moon. This has been blowing up all over social media recently, bringing a lot of exposure of the stock market to ordinary people. I'm sure a lot of you may be wondering what all the buzz is about, but before I can try to explain what's going on, I have to go over the basics about the stock market first. So in this video I intend to do just that and focus only on the basics of how the stock market works. So if you're ready, I'm ready, let's get right into the video. Alright, before we can discuss the stock market, we first need to understand stocks and how they work. So what is a stock? A stock represents ownership in a company or business that chooses to have their shares publicly available. So if you buy one share of Apple, technically you own a very small percentage of the company. So you get to share on the company's successes and failures. If the company is successful and makes money, the value of your share will rise. If the company isn't doing too well, the value of your share will decrease. Okay, so now let's talk about the stock market. Stock markets facilitate the sale and purchase of stocks between individual investors, institutional investors, and companies. In other words, when you press that buy button on your broker's website, you're buying shares that another investor has decided to sell, not from the company directly. So how are the prices of the stock determined? Plain and simple, supply and demand. At any given time, if there is a lot of demand for a stock, investors will buy shares of that stock faster than investors can sell shares of that stock, driving the price up. Conversely, if more investors are selling a stock than buying, the market price will drop. To take this conversation a step further, there's actually a middleman between buyers and sellers. These are called market makers. Market makers ensure that investors can choose to buy and sell shares immediately during market hours. Market makers buy and hold shares and continually list buy and sell quotations for shares. The highest offer to buy shares listed from a market maker is known as the bid. The lowest offered selling price is known as the ask. The difference between the two is called the spread. Sometimes I like to consider the stock market a big bowl of feelings. So we already know that supply and demand affects the price of a stock, but sometimes there's news or events that happen that affect the way people think about the future of a company. I'll give you all a heads up and let you know that the biggest thing the stock market hates is uncertainty. For example, what do you think about the CEO of company XYZ selling all of his shares in that same company? Sounds a little fishy, right? Well, that actually raises uncertainty for its investors. A lot of people might think that the company might go out of business because of a move like that. This could lead to people selling their stock out of fear, driving the price down. The converse is also true. So what happens if company XYZ's revenue is 2 or 3 times higher than its projected revenue? That would tell investors that the company is making money, which would lead to more investors buying shares, increasing the price of the stock. This idea of fear, uncertainty, confidence all ties into my analogy that the stock market is like a big bowl of feelings. These feelings affect the demand of the stock, which then affect the supply and then the price. So how do we know when the stock market is doing good or bad? Well, people often generalize the stock market to a few well-known indexes like the S&P 500 or the Dow Jones Industrial Average. These indexes represent the performance of a large group of stocks, but not the entire stock market. For example, the S&P 500 tracks the performance of the top 500 publicly traded companies in the United States. Indexes are a convenient way to approximate the performance of what's happening in the stock market. But it's important to know that these indexes do not fully represent the entire stock market. So this is all basic information about the stock market and how it works in a very simplified manner. For anyone that wants to get started investing in the stock market, you can get 1 free stock by signing up for Robinhood. The link will be in the description. On top of that, Webull, another trading platform, is going to give you 2 free stocks when you sign up with my link in the description. Actually, they're going to give you another 2 free stocks when you deposit $100 or more into the platform. That's basically free money because you can make the account, claim your free stocks, sell their shares at market price, and then send that money back to your bank account. And with that, I hope this information helped you learn a little bit more about the stock market and how it works. If you wouldn't mind hitting that like button any odd number of times for me until it turns blue. It helps me out a ton, and subscribe if you want to see more videos like this. Thanks everyone for being here, and I'll see you guys on the next one.